Getting a little of that Fever Tree, not a sponsor of the program, but Fever Tree ginger beer, not the ginger ale. The ginger ale is clear, not as spicy. The ginger beer, that's a spicy. It's a little spicy spice. And not that many calories. It settles my stomach. If you want to have a great beverage, have a ginger beer. Delicious. So we're doing a live and we're doing it late. Toby, welcome. Noti number 1. Christopher, Noti number 2. Oh, whoa. What's going on here? Are the noties coming in a reverse order or something? I can't even tell here. Oh, those are my on-screen noties. Let me get my stream here going. Okay, yes. So Mike was Noti 1, Christopher Noti 2, Toby Noti 3, Lavin Noti 4, Justin Noti 5, Frank Noti 6, Michael Noti 7, KM Noti 8, Noti Gang love you too, Barber 9, Ben 10, Wade 11, Everin G 12, Richard 13, Johnny 14, Uncle Jason Horace 15, Seg Tawag 17 maybe, and then closing up. Oh, getting ready for Founder University. Great, I'll see you in an hour. Greenhouse, Table Salt. You are not late this time. And Patrick, all my favorite noties coming in strong in the Noti Gang. If you don't know what the Noti Gang is, I can't help you. All right, everybody, give your boys and your squad a thumb. Say hello to the squad. Here's your producers, Rachel, Justin, Nick, and Charles on the 1s and 2s. Let's say hi to our crew.
Jason, your video is brutal right now.
Okay, well, that's the way. It's probably because I was changing my size of my screen to get more noties on the screen. I'm going to put it back at 100%. That's another theory we might have on this issues. But there's the squad, everybody. Say hello to your favorite producers, the hardest working producers in show business and podcasting. Audio is fine. That's good.
That is true. The audio holds up well. It's just the video goes crazy sometimes.
Look at these great views, Charles, on the 1s and 2. Very nice. I would like you to master this. Charles, get us more looks and views and all kinds of great stuff. If everybody could give me a thumbs up in YouTube, that'd be great. More people will find out about the show. And if you don't know, now you know. If you don't know, you don't know. It's basically that easy. I'm going to do we're doing a late record here because Facebook just released their earnings and there was like Facebook data dump day. So we're going to just record this. And then tomorrow, this show is going to come out very early in the morning, East Coast time, or maybe even late tonight. You'll get to hear it now as part of the Noti Gang. And we turn off these videos now, right? Across all the services, including Twitter?
We do. Yep. I go through and I delete your tweets.
Oh, you delete my tweets. Great. Mm-hmm. So now the way it works with the Noti Gang, and then on YouTube, we don't delete them. We just hide them, right? So we have them
private.
Yep. Perfect. But on LinkedIn, do we leave them up? And on Facebook, we leave
probably
them up?
Like 75% of the time we delete them on LinkedIn, I think.
Okay. Yeah, I've missed a couple LinkedIn ones. Facebook,
okay.
I deleted some of them, but they get so few views that
doesn't even matter.
Yeah. But we probably should do it just out of
Facebook
best practice.
Just the best practice. Let's turn them all off. Or we can stop streaming to Facebook. As far as I'm concerned, LinkedIn, YouTube, and Twitter seem to be. But actually, no, wait. Somebody's on Facebook here, so let's not do it. But let's make sure we turn them off. Okay, everybody. I'm going to start the news, and then what?
So generous of you to cater to our one viewer on Facebook.
Absolutely. I'm a customer service facing guy here. Yeah. If I have but one member of the Noti Gang on Facebook, they're going to get full.
You get a whole new platform dedicated to
Absolutely. Yourself. Dedicated just to that person. What interview is this going to be paired with, Nick? Tomorrow?
This is going to be paired with
Jeremy Kai.
Explain to the audience. Producer, explain to the audience who they're going to have.
Rachel, you want to take this one?
Jeremy Kai is Italic. He runs essentially a marketplace or a platform for manufacturers to sell their goods in a way where they make more money while also offering lower prices to consumers. So check them out, italic.com.
I'll give you a C+ on that. Let me watch the master do it. Italic works with factories in China to have them make jackets, ski goggles, T-shirts, any number of consumables in a fashion that's very similar to the people they make those products for during the day. They then put those for sale on their website, Italic, and like Uniqlo or other places where there's no logo on the clothes or it's hidden, you get to buy generics, but high quality generics at about half the price as other people or a third. So I looked at ski goggles, and they had ski goggles on the italic.com website that were $50 that I had paid for a similar one that was $200. And so same factory, same build quality, no brand name, boom. It's really revolutionary. You're going to love it. So you see how I sold it a little more there? A little more selling of it, telling the storytelling.
I'm nodding my head.
You're nodding your head. Oh, God, millennials. All right, let's get started here. And then what else do we have coming up this week, Nick? You want to give a little preview of what's to come for the week? It's Monday,
Yeah, no
Tuesday,
problem.
Wednesday, Thursday, Friday. Give people
on Wednesday, we have Ryan Breslow from Bolt. You talk about the 4-day work week.
Yes.
You also talk about competing with Fast a little bit as the
Right.
one-stop shop for what is it? The one-click payments.
One-click payments, great. Sure.
Startup checklist, episode 4.
Great.
This week we're going to be covering product. You can check that out
Awesome.
at thisweekinstartups.com/checklist.
That's Thursday.
And then Friday. We have Gabriel Weinberg from DuckDuckGo. Just raised.
Big guest.
Yeah,
Big guest. Okay,
amazing.
great.
He was great.
Big week.
And also,
yes.
if you want to work with us, go to thisweekinstartups.com/jobs. There's a job posting on there for an editor position, a producer editor position. We don't know yet whether we're going to go with an overnight editor, someone to join us during the day. Probably we're going to try and offset hours, whether that be a different time zone or in the US or abroad. I don't know.
We're looking for a predator, producer editor.
Yeah.
Somebody who could edit video.
We are looking for a producer editor for sure.
Nick, that's a legit term. Predator.
Predator. But it's really an editor who has a little bit of production ability. Correct?
Yeah.
Got it. So you can't not be able to edit. It's not like Rachel or Justin who, I don't know if they edit video, but their primary job is producing. This is primarily editing.
Yes, primarily editing.
Primarily editing. Like when we do shows.
Upside potential on producing.
Perfect. Love it.
Yeah.
And that will bring our team to 5 people in the production group, which is pretty amazing when you think about it. But we're doing 6 episodes a week now, 5 this week in startups and all in. So 6 episodes, 5 people at full scale. And then we're doing a lot of clips, and the punch list to promote this stuff has been growing because we're trying. We're not even getting transcripts done yet. We're not getting like a landing page for each of these. We really got a little bit of more work to do here to make this the CNN of startups. But it's kind of where we're headed, isn't it? It feels like we're becoming the CNN of startups. So we're going to be doing late nights on the calendar or end of the day when we have earnings reports. So there's an earning reports. We're going to make a whole earning report calendar. So when Tesla or Uber, Airbnb, all the major ones, I'll talk about their earnings and what I think that means, because I think that's really a good moment in time to judge these companies and have a conversation about them. Today will be Facebook, and there's a bunch more coming this week.
I don't know if
that's a good question.
Like fake or real, but Dharmesh Shah from HubSpot, CTO, is commenting on our Facebook right now.
That is the real Dharmesh, because Dharmesh is the.
I agree with him that predator is a bad term, and I would much rather say Ed Rooser.
Ed Rooser, I like it. Yeah. Dharmesh, when are you coming back on the pod? I love Dharmesh.
You want to join?
We were like early
camera ready, Dharmesh. Hop
friends, and Dharmesh and I would invest in startups together. It was a lot of fun, and it's just great to see a winner like HubSpot. I remember when he launched it, it was like. People were like, oh, that's a nice little toy. And then it was just like, oh, it's a standard. Just like, boom. So well done, Dharmesh. Okay. So, Robinhood earnings are tomorrow? Let's go. LFG. Also tonight, we're starting
HubSpot's a $40 billion company.
That's unbelievable. So we also are going to have Founder University starts tonight. I'm really excited about that. 100 people signed up. We charge them $700 each. And then we're returning the money if they complete all 12 weeks. And if they haven't excused, if they got a kid's bar mitzvah or somebody gets sick, we're not going to not give them their money back if they do 11 of 12 weeks or something like that. So there'll be absences and stuff like that. But I'm really excited about it. And then tomorrow's book club. Rachel, tell them about book club. Sorry, I'm not camera ready. Put the kids to bed. Yes, please do that. But we will have you back on, Dharmesh. Cameras up.
Is coming.
Yeah.
Cameras up. A second.
There you go. Boom.
Can you guys see me okay?
We do. Rachel reporting.
Book club is going to be tomorrow. Really exciting at 4:30 Pacific time. The book we're going to be discussing is Working Backwards, Insights, Stories, and Secrets from Inside Amazon. Mm-hmm. I shared my notes with you earlier today. I'm really excited. And if you already RSVP'd, you should have gotten a notification and Zoom link. And I also sent out an email. If for some reason, if you RSVP'd and you didn't get that, or if you already read the book and you forgot to RSVP, message me over on Slack.
Do you have to have read the book to come, Rachel?
I think you should read the book to come because we are planning on live streaming it. So you could just watch it on live stream if you didn't read the book. But if you can't participate in the conversation, you have to have 90 seconds of good takeaway points to talk about. What happens if we call on you and you haven't read the book?
No. You'll raise your hand. If you want to come hang, you can hang, even if you didn't read the book. So I will let you come if you didn't read the book, and you might get inspired to read it, or you can consider it like the crib notes. So it's fine with me. So I'll make a executive decision there that you can come if you.
Will we be streaming it?
Yeah, I want to live stream it, and I want to have people come up and give their observations like I did in the previous ones. Mm-hmm. So I guess that's Restream or it's Zoom. We're going to send everybody to Zoom.
We figured it out this
Zoom
morning.
to Restream. Okay,
that's exactly what we're going to do.
Okay, perfect. So everybody comes to Zoom, and then we'll restream it. So Noti Gang will get to watch it as they always want to. But if they want to get the Zoom link, you got to go to thisweekinstartups.com/book club. Mm-hmm. Correct? So we should throw that up on the screen, Charles, whenever we mention a URL, thisweekinstartups.com/book club. Okay. Let's get to the show. Here we go. In 3, you guys ready?
Is your
QuickTime is still running. Yes.
Running. Okay.
3, 2. Okay. Facebook reported their Q3 earnings just tonight. And 3, 2. Facebook reported their Q3 earnings and disclosed that Facebook Reality Labs, aka Oculus, is spending $10 billion in 2021. Let's break it down because there's a lot of important things going on at Facebook. They're changing the reporting structure dramatically starting in Q4. So they let us know about that today. And they'll be reporting metrics for 2 different segments. This is very reminiscent of what Google did with, hey, here's Google the business, here's YouTube, and here's other bets like self-driving, Waymo, Nest, etc. So in Facebook's world currently, FOA and FRL are the 2 segments. FOA stands for Family of Apps. That's Facebook, Instagram, Messenger, and WhatsApp, all the apps you hate to love. And then FRL is a fancy acronym for Facebook Reality Labs. It's kind of dumb that they call it this. They should just call it Oculus. In my mind, that's the brand. So that includes Oculus, and if they ever do some sort of AR product. And so that's going to be very interesting because I think Oculus has some limitations to it, but man, augmented reality, I would not be surprised if Facebook drops a surprise at some point in the next year or 2, given the amount of money they're investing, and goes head to head with Apple and Microsoft HoloLens and does AR. That's really, for me, the holy grail, not VR. So here is the Facebook press release quote. We expect our investment in Facebook Reality Labs to reduce our overall operating profit in 2021 by approximately $10 billion. This is extraordinary. Let's get into their revenue. Facebook revenue for Q3 was $29 billion. That's a 35% increase year over year. That's extraordinary. If you're above 10, 20% growth year over year at this scale, that's serious growth. So congratulations to the team there. But said another way, they would make a third more in profit if they weren't doing Oculus, or it'd add 5 million, or it'd add 2.5 million each quarter, 2.5 billion each quarter, if they weren't doing Oculus. In other words, just like Google, if they weren't investing so heavily in other bets, they would be even more profitable, like crazy profitable. Now, here's where it gets interesting. Facebook gave a wide range for Q4 estimates. This is the next quarter of $31.5 to $34 billion. That's a big swing, right? We're talking about $2.5 billion here. And they're citing, quote, the significant uncertainty we face in the fourth quarter in light of continued headwinds from Apple's iOS 14 changes and macroeconomic and COVID-related factors. Now, this is super notable because Apple disclosing the app tracking stuff and the transparency features as a risk factor means it's a risk factor. Like they wouldn't be putting it front and center. They're trying to prepare people for bad news. And I bet that bad news continues. So why is that happening? Apple is trying to protect our privacy. So they're not letting information about your phone be shared with these ad networks, Facebook's and Google's, like they used to. What this means is Apple is getting to make more money selling ads in the App Store, and their percentage of revenue for app installs is going to go up. For Facebook and Google, this means they're not going to be able to target app installations, and app installations are a huge part of the ad ecosystem. Why? Certain apps make a lot of money. We all know that. There are certain games that have whales in them, certain games that have subscriptions in them. There's a really great, vibrant ecosystem. And so people will pay $1, $10, $50 to get an app installed, depending on how much money they can make from it in the future. That's why you see app ads everywhere. Well, Facebook has been making money hand over fist doing app ads. They don't own the App Store. And now Apple is basically really kneecapping Nancy Kerrigan style Facebook, and it's really notable, I think. So, but survivable. Let's put it that way. Like even if they lost 10% or 5% of their revenue, it's not going to kill the company. It's really an annoyance, I think, more than anything. So let's break down some more of the metrics. 97.5% of Facebook's revenue came from advertising. 2.5% was classified as other, though they don't say what that means. My guess is Oculus is hardware, Beat Saber and other apps that they sell, and of course the Portal, the failed, horrible, put a picture frame from Facebook in your house with a camera and a microphone, something you would never do in a million years. One thing to note, although advertising makes the majority of their revenue, obviously, it did triple year over year, the increase in other revenue. So we could see in the future app revenue of app installs on Oculus become a bigger piece of their revenue. And that would be pretty interesting, right? So let's look at the users. DAUs were 1.93 billion for September 2021. That's an increase of 6% year over year. This is where it gets interesting. So they're growing very modestly year over year in terms of daily active users. That's DAUs, right? There's DAUs, there's MAUs, there's WOWs, daily, weekly, monthly active users. But their revenue is growing 35% year over year. So what that means is they're getting more money out of every user, but there's not as many customers here. That's a red flag, not a major red flag, but so it's not a minor one either. Getting more revenue out of each customer is a good thing, that you like to see that, but seeing just really modest growth in the user base is a major red flag. So you do want to see people extract more value from each user, but you don't want to see anemic year over year growth in the user base. So that's, I think, a pretty big headwind. Monthly active users were 2.9 billion during Q3. That's an increase of 6% year over year. And monthly active users grew 12% previously from 2019 to 2020. So we're seeing the growth of users got cut in half, both in dailies and monthlies. There's two ways to look at this. One way to view it is, hey, maybe they're getting everybody. They've reached their natural audience. The other way is they might be losing users. And this doesn't say exactly how many minutes they're spending online. That would be another interesting vector. Obviously, they don't want to release that, but you can be sure they're studying that internally because that relates to all the addictive nature of social media and their revenue. So that's another metric that we'd love to get out of them and understand. But of course, they're only going to give you the metrics they feel they need to. Daily active people is another metric they use. And that was 2.8 billion on average for September 2021. That's an increase of 11% year over year. And that's the total amount of users across all of Facebook properties. And they define that as registered and logged in users of Facebook, Instagram, Messenger, and WhatsApp, their family of products. Obviously, Messenger really isn't, and the MAUs and DAOs I mentioned before, previously were only for Facebook, right? So they do have other users. The WhatsApp users are probably monetized very lightly. I don't think they have advertising in there yet. Somebody can fact check me, email producers at thisweekinstartups.com if I got that wrong. But I don't think they're monetizing WhatsApp all that much. Employee headcount is at 68,000. That's extraordinary at the end of September. And it's an increase of 20% year over year. They've got lots of people working on the metaverse, augmented reality, virtual reality. You don't see the world at all. Your headset covers your eyes. You only see the virtual world. Augmented reality, you see the virtual world laid upon the real world. That's the difference between augmenting reality and a virtual reality. I think you all know that. Revenue per employee, just back in the envelope, if they're making about 120 billion a year on a run rate, you can divide that by 68,000 people and you get 1.7 million per employee. That's pretty staggering when you think about it. So Facebook's revenue, profits growing significantly, user base slowing. How are they going to respond to this? Could it be natural audience? And the way you would grow here is to either launch a new platform like Oculus, or you could acquire things. They're not going to be allowed to acquire things given, all of the papers that have been released, the Facebook papers, and how poorly the company's looked at by governments around the world who have concerns about how Facebook is impacting society, and impacting elections, right? So the days of them being able to buy a WhatsApp or Instagram are way over. Or Oculus. I don't think they would be allowed to make any of those three critical purchases they made. In related news, according to a report in The Verge that was kind of lightly sourced, Zuckerberg might announce a Facebook rebranding during their Connect conference this Thursday. The Verge quoted a source with direct knowledge of the matter. So you can take this with a grain of salt. I'm not saying that The Verge is lying, but who knows? When you only have one person talking about it, not three or four, it's thinly sourced. And so this may not be true at all. Some people are speculating that it could be metaverse or meta. He seems to be obsessed with the metaverse. If you haven't heard of the metaverse, that's just the virtual reality space where users can interact with digital, avatars and places. Roblox and Fortnite would be considered metaverses. It's just kind of like a science fiction term. And Oculus would certainly be considered one. I don't consider Roblox, Minecraft, and first-person shooters like Fortnite the metaverse. I think the metaverse should be reserved for virtual reality, not 2D, and maybe augmented reality in some way. But it's something that has never gotten big. If you put aside Fortnite, which is obviously huge, it's basically still a pipe dream. We had Second Life for a period of time. We now have Oculus. And I talked about this on the pod last week. You have a very small base of users on those devices. I find that real gamers want to play Fortnite on a PC or on a console. And then casual users want to play casual games on their iPads. So who exactly is the Oculus for? It's not for hardcore gamers. It's not for casual gamers. The best we could come up with was people who wanted to play the golf simulators and stuff that maybe was hard to do in the real world or expensive to do in the real world. Skiing, golf, scuba diving. Rec Room seems to be pretty good. Things that make you feel like you're experiencing some real world activity. Beat Saber comes into mind as well. So if you go to the Connect conference website at facebookconnect.com, it does have a very metaversy feel. And the conference is branded as a front row seat to the future. Create AR presence and push VR boundaries are listed as two of the topic sessions. So they don't have an AR product, but they do want to push the VR boundaries. This says to me that there is something new going on here. In terms of focus, my inside information is there's a couple of buildings here in the peninsula over by Coyote Point in the airport here in San Francisco, just south of SFO. Facebook has leased a bunch of buildings, and that's supposedly where they're working on this. And I think Zuckerberg's had enough of dealing with Facebook and things, and I think he wants to go all in on this. And he knows he's going to get disrupted possibly, and that's the next big platform. So he is skating to where the puck is going, and whether that takes another 5 or 10 years or 10 to 20. But he is very concerned about being disrupted in the way Microsoft was. Remember, he was always enamored with Bill Gates as a role model, and he saw Gates not get the mobile phone or the mobile phone operating system right. And he believes that could happen to Facebook. What's really happening here, though, is I think he's going to rename the company, break it into units. Then if you have to take action against the company, you're going to take it against a specific unit. And he could, I think, pull a Larry and Sergey, make himself executive chair, put a CEO in charge of Oculus, and put a CEO in charge of the Facebook collection of apps. So Sheryl Sandberg could run Sheryl Sandberg could run one group, and then somebody else could run the other. He could be executive chair. He could obviously make all the decisions. He's got voting control. But then when they say, hey, come to Congress, come to the EU, come to this country, we're going to pull your plane out of the air with fighter pilots. Remember all that drama? Like he's going to set foot on the soil of the UK and he's going to get dragged to Parliament. Well, he could just say, I don't work there. I'm not the CEO anymore. I don't have a day-to-day role. I am the chairman. And that's exactly what's happened with Sundar is going, and he will testify. And Larry and Sergey, they actually don't work at Google anymore. They work on the big bets, which is what they want to work on anyway. And so they can basically avoid any scrutiny. So we'll see if Congress, senators, and Parliament, fall for this trick eventually. I think what they should do is look at who has voting control of the shares, and that's the person. So if you're a senator or a congressperson, you're listening, Here's how you do it. You can say, bring the CEO, but we want to know who's in control of the board. So who controls the board? Who has the most shares and the most voting power? That's the person we want. And in that case, sorry, Larry and Sergey, sorry, Zuck, you would have to go and have these tough conversations about society and the impact these technology companies have, which is a totally legitimate thing for us to have conversations about. And so, the article also notes that the new name is a closely guarded secret, and even senior leadership at Facebook is unaware. If you were going to do a rebranding like this and you were CEO, what you would do is you would come up with 10 names, you would have 10 logos designed, and you would narrow it down, and you would have your press team write up all 10 press releases, a landing page, and then nobody would know, and then you would print it. Just like when I understand when they did the Luke Skywalker cameo in the second season of Mandalorian, spoiler alert, if you didn't see it by now, it's your fault. They actually filmed some other Jedi in that position so that even if people got on set or somebody had figured it out, they wouldn't be able to leak it because there were different endings that were filmed. And they've done that before with other TV shows where they film multiple endings. I think they did it with that show Lost as well. This way people couldn't guess or couldn't leak more accurately. And then finally, in the Facebook world, internal Facebook documents obtained by The Verge. It seems like today was document dump day. I think all the journalists got all of these documents at the same time and were all agreed to make their stories come out today. That U.S. teenage users have declined by 13% since 2019 on Facebook. This is a big story, I think. And it would match maybe what their growth issues are. Maybe they're keeping everybody who's above, 25 years old, but they're just not getting young people. That would vibe with what we see in the real world with people who are younger liking TikTok or maybe Snapchat. The internal documents were part of those disclosures made to the SEC and Congress by Facebook whistleblower Frances Haugen. The Verge obtained the redacted versions of these documents that were received by Congress. The specific document in question was an internal memo sent by a Facebook researcher earlier this year. Some more stats from that memo. U.S. teenage users were also projected to drop 45% over the next 2 years. Young adults between the ages of 20 and 30 were expected to decline by 4% during the same time period. This all aligns. And on average, the younger a user was, the less likely they engaged on Facebook. This makes sense. The way these are going to work, social networks, that is, the way social networks will work is they will be generational, maybe multi-generational, and every generation or two, you'll see them turn over as younger people don't want to hang out with their grandparents. Like if you're on Facebook and you're 19 or 20 years old, you're kind of hanging out with your grandparents and your parents. It's bad enough you're hanging out with your parents, but you don't want to hang out with your grandparents. That's crazy. And so we'll see this, you'll see multiple arcs of the life of a social network like we saw for AOL, MySpace, etc. The only ones that may crossover would be something like LinkedIn for business because, business is still being done there and how could you not have one? So quote from The Verge, the researcher predicted that if, quote, increasingly fewer teens are choosing Facebook as they grow older, the company would face a more severe decline in young users than it already projected. Now, this isn't as bad as it seems. As we saw in the revenue, older people have more money to spend. They have more disposable income. They make more decisions about money. So Facebook would benefit as people get older because they have more discretionary spending and people want to reach those people. That being said, when you have, for certain categories of advertising, you want young people, the avant-garde, and although they may not spend that money, a lot of people know that if you become a BMW driver or a Mini Cooper driver and they get you for your first car in one of those cars, you might keep going and buy 2 or 3 of those, right? Anybody out there ever buy 2 or 3 of the same brand? Tesla, Beamers, Mercedes, Hondas. Like some people just get locked into a brand. And so there's a lot of spending, a disproportionate amount of spending compared to the outcome, the output being how much you spend. So you may want to get somebody in that BMW that costs $40,000. They have some of those entry level models in order to eventually get them up to a BMW 7 or whatever the more expensive ones are as they move up socioeconomically and with discretionary spending. So remember, Facebook was planning on releasing a kid-specific app back in 2017, Messenger for Kids. Actually, they did launch in 2017 Messenger for Kids, and they were going to launch Instagram for Kids. And Mosari put that on the shelf. So this jives with what we saw. they wanted to create kid stuff because they're not getting teens. But if I get you early as a kid when you're 10 to 15 years old, maybe I'll keep you when you're 15 to 21 and in high school and college. Sounds like that's what they were trying to do. I don't know if it would have worked anyway, but it is a really interesting time, I think, for Facebook. I don't know if I would buy the stock at this point in time. I do think that they will still continue to grow their revenue at a great pace. I don't think Oculus will necessarily pay off. It's a 50-50. It's a jump ball. Apple could win that. Microsoft could win it. Google could win it. Maybe somebody who we don't even know, who is a startup, could win augmented reality. It's really, although it's an expensive game to play because you have to create hardware, it might not be the hardware that becomes the thing that matters. There might be some software that you can use across all of these platforms that then wins the day. In other words, what Facebook did or what Google did. There could be some new business model here, like the metaverse, like cryptocurrency, like people making coins and having a distributed metaverse. Maybe that's what wins. So nobody knows, but we do know users are slowing and revenue is growing. I give Facebook obviously an A+ on the revenue growth. They got a serious problem with acquisitions and their PR. That's F-. And so this is the type of stock I would stay away from. And, I sold all my shares in Facebook when they were at like 110 or 120, like 4 or 5 years ago, because I just didn't want to be profiting from investing in this company. And there's plenty of other opportunities to make money in high growth tech stocks. Why choose this one until they change their behavior? I don't think that they have been good actors. I'm not sure how much of the current stuff being released is as bad as the stuff they've done previously, to be totally honest. I just think it's one of those companies where privacy and users don't matter as much as the bottom line in the stock price. If they really cared about users, they would offer a $10 a month, no tracking, no advertising version like Netflix does, but they haven't offered that. Just charge us $10, Zuck. If you really want us to embrace the service, charge us $10, delete all of our data, protect all of our data by deleting it all. I pay you $10. You get rid of all my data. You never sell it to anybody. I'll pay you $120 a year. Maybe you let me buy the whole package for $79 a year. I get Instagram, Facebook, WhatsApp, Oculus, every service messenger with no advertising and no tracking. Just do it. See if you can get 10 million people to pay you $10 a month. I know it's only 100 million. I know it's only 1.2 billion, but it's pure profit. And it would take the heat off, because then every time you get dragged into Congress, you can just say, look, we surveyed 3 billion people. Of the 3 billion, 1% said they wanted to pay. 30 million people are paying us $10 a month or $5 a month for the service. We're making $2 billion a year free cash flow from that pure profit. Seems like a good idea, right? So we've got slowing user growth, declining usage with teens, advertising revenues being eaten to by Apple. They're rebranding to maybe make themselves less dependent on the Facebook declining franchise. Sounds to me like a little bit of chaos over there. And from what I'm hearing, people don't want to work there as much anymore. If you're a young person, do you really want to be associated with this train wreck? Probably not. And that's probably why they pay such high salaries, because they have to. But again, I think the chickens have come home to roost. I think all that bad behavior means every time they do something new, people expect the worst from Facebook, because Facebook has behaved the worst. If you behave the worst of any other company for 15 years, and then people actually give you credit for that, you kind of earned it. I think Zuck earned it. Move fast, break things. Don't care about people's privacy. Don't care about elections. Just move fast, raise the stock price, and not be thoughtful. And I think that's what people are responding to here. Okay. Stick around for our amazing interview, and I'll see you next time. 3, 2. Stick around for an amazing interview. Who's the interview?
Jeremy Kai, by the way.
Stick around for my interview with Jeremy from Italic.com. It's a really interesting, groundbreaking, and disruptive e-commerce model that I think Amazon's going to have to copy. Stick with us.
Great. Can you do one pickup for me?
Yep.
Up top, hovering over there, 3 in bold. Facebook revenue was for Q3 was 29 billion.
3, 2. Okay, Facebook's revenue for Q3 was 29 billion, a 35% increase year over year. Boom.
And the 2 bold ones under them too.
Net income for 2021 is on pace to be around $36 billion. In other words, they would make 1/3 more in profits if they weren't doing Oculus. And that's what a lot of people on Wall Street are going to be wondering, just like when Amazon, invested heavily in AWS, or with Google investing heavily in Waymo or Fiber and other projects. Good?
Good.
Okay.
Good to go.
How many thumbs up do I have? How many thumbs do I
Checking
have,
out, grab the
fam, in
number.
YouTube?
Nick,
Anyone else
ad
know off
read.
the top of their head? I'm checking right now.
I have an ad read. I didn't
have
get
a
to
couple
read
ad
all your
reads for after
comments
this,
while I
yeah.
was doing that whole Facebook thing. Hopefully that was helpful for some of you. We'll do it live. We'll do it
And,
live.
excuse me. And we need an intro as well.
Intro, is the intro up there?
Do your Ask Jason things first. We'll do everything
Okay.
after.
Anybody have a question?
50 upvotes.
Great.
50
Two
upvotes.
questions then. You earned 2 questions, fam. Who's got?
I saw a really interesting one, and it kind of focused. I'm going to look for it, but you can answer it. Why do you think some people or people that are kids that are younger okay to work at companies like TikTok, but are so against working at companies like Facebook?
Okay. Great question. I think TikTok's just cool and Facebook's not. I don't think people are making a decision by based upon if the company is owned by a communist country or greatly influenced by one or out of a communist country and is spyware. So young people probably just don't care about Facebook and they really do care about TikTok. TikTok's an incredible product. It's incredibly well conceived. It's incredibly entertaining. I don't know how healthy it is for society. And you can be sure that I think the people running it actually don't care all that much. I think I think TikTok should be banned in the United States unless we're allowed to put Facebook, Twitter, LinkedIn, etc. in China. That's my feeling. We need to have a reciprocal environment with every country we work with, including the Chinese. And if they don't like the fact that these services give some level of anonymity or freedom of speech, well, then you can't have your service here in the US. Great question. Okay, take one more question, and hopefully they'll have written up my intro by then.
Yeah, you guys need to start
Anybody else
posting
have
more questions. Come on, guys.
No questions for my team here. Okay. Nobody's got a question. You can ask me a question on anything. Okay.
Oh, here's one. J. Cal, what is your strategy? And do you have
You
any
sound
plans
like you're
to-
underwater, by the way, Rachel. I got the question. Here we go. 3, 2. Here's a question. J. Cal, what is your strategy? And do you have any plans to invest in India given the recent boom in the Indian startup ecosystem? This is a great question. I get it a lot. And I've increasingly been getting a lot of founders from Africa, India, Japan, emailing me on a regular basis. Founders should want investors who know their market, know their culture, speak their language, and understand their traditions and legal frameworks. I do not understand any of that. I've never been to India. I have been to Japan a couple of times. I have never been to Africa, but I might be going soon. So I think it's best for founders to get local angels, local venture firms. That's why Sequoia opened up an Indian office, a Chinese office, and they kind of run, from what I understand, autonomously, and they have their own decision-making process. Although they share the brand, I'm sure they share a bunch of LPs. They are not designed to have the U.S. investors investing in China and India. They've got boots on the ground. You can't do this unless you understand the culture, unless you have people. So right now, I am overwhelmed, literally overwhelmed by the number of people who email me and apply to our various programs that launch the Syndicate, Founder University. So until such time that I can catch up with the U.S. English-speaking, Australian, Canadian, UK, English-speaking diaspora and that market, I'm going to have to say no to taking on another market. As much as I love to go to those other markets, I would love to be investing in Japan because I love going to Japan. But there's a bunch of angel investors. In fact, there's somebody there they call like the Ron Conway or Jason Calacanis of angel investing who's done 200 investments. So there's just a bunch of people there who will do it better. So for me, same reason I don't invest in China. I think that's a rigged game. It's kind of a different reason, but also because what do I know about what Chinese consumers are going to do? And I have a specialty, in fact, in understanding consumers here because I might have 10 companies that do consumer subscription in the United States, and I can rely on them to give me a lot of information. Okay, so I got to wrap. Where's my intro? Okay, here we go. 3, 2. Great show today, everybody. Jeremy Kai from Italic joins us today to talk about.
Hold on, you got to redo it. You froze. Your video froze.
3, 2. Hey, everybody, we got an amazing show for you today. Jeremy Kai from Italic.com joins us to talk about his incredibly interesting, perhaps disruptive e-commerce model is having factories and factory owners build really compelling products that compete with the people they build products for during the day and selling them directly to consumers. It's kind of like Uniqlo. It's kind of like Amazon Basics, but it's much better. And I'm kind of addicted to it already. But first, I'm going to talk about Facebook's Q3 earnings. Revenue is up massively, 35% year over year on a big number, but user growth is slowing dramatically. Only 6% daily active user growth. And they might be rebranding as the metaverse company later this week. And they seem to be in a full-scale panic over these leaks and the fact that young people have stopped using Facebook in a massive way. Stick with us. It's going to be a great show.
You had some crazy video freezes. I think the best move might
I'll
be
do it from the beginning.
We got to hold on. Yeah, you're still freezing like crazy.
It has Zoom started. Has Zoom started?
I was just
Nope.
going to say
No
we should
Zoom.
just do it on Zoom.
Let me shut my.
because
Let me just show
we
off
got to do a
Slack.
bunch of ad reads anyway.
I just turned off my Slack, so don't try to meet.
That's weird. It literally just
JCal's
just
bitrate
now,
says
like-
burr.
Brr, I don't even see
like
my.
like well, I've
green-
completely lost you, Jason, right now. Like this is so weird. Okay.
Yeah,
now it's potato.
I think there's maybe 4 pixels on your entire screen from you right now.
I'm going to drop
It's
down to
crazy.
standard def. I'm dropping down to standard def.
I think maybe in future, if we're going to do this, maybe we do internal QuickTime video as well.
Video. Yeah, it's a big file, but maybe.
Yeah.
I could pop up a QuickTime to do the intro real quick. I could stop the QuickTime
Sure.
player and do a video.
Yep. Yeah.
Oh, no, I'm green now. Here we go. 3,
Okay.
2.
Not
we
for
have
us though. Hold on.
You sure it's not green?
All right, go ahead. This is terrible. This looks
Three?
so bad.
Is it really that bad?
It's so
It's
bad.
pretty
Yeah,
bad.
It's terrible.
Okay, then
Yeah,
I'll
it's
just
not
record
great.
it.
It's
I'm
not
going to
great.
record it independent. Okay.
Okay, so
right.
stop your audio. New video recording. Watch this time. It's like perfect.
QuickTime, file, new movie. And I'll put this at the lower setting cam. Oh, I can't set the settings. Okay, here we go. I'm now recording. Opening 3, 2. Hey, we have a great show for you today. Jeremy Kai from Italic.com joins the show to talk about his incredibly disruptive e-commerce model. He's basically taking factories in China, having them build amazing, no brand, no label products, basically like Amazon Basics or Uniqlo, if you know that brand. And then he's having those factories sell directly to US consumers. It's a super interesting model, and they've just raised a ton of money, and the products are absolutely addicting and brilliant. But first, we're going to talk about Facebook's Q3 earnings. Revenue is up massively, 35% year over year, which is on a big number. So that's pretty impressive. But user growth is slowing. They've only grown 6% in daily active users year over year. That's down 50% in terms of their growth rate. And they might be rebranding this week as the metaverse company, and all these papers are being dropped, and they're losing a ton of young teenage users. That spells a lot of headwinds for Zuckerberg and Facebook. We're going to break it all down and talk about it. Stick with us. We're going to break it all down and talk about it right after the break. Stick with us.
Good.
Okay, I'll upload that. Intro, stop that. Oh, you want me to do the ads on the same video?
Yes. I think so.
Let's,
At least
we
at
can
least
just do
one
it
of
on
them.
Zoom.
Hold on, I'll
Unless
just
you
do
want to
the,
do the ads live.
I'll do the ad live. That's fine. We'll do it live.
All right.
I don't mind doing the ads live. I think the
I
notice
mean,
live.
at,
I'm not
at a
seeing any
minimum,
more
I'd say-
notice.
At the minimum,
Notice
I'd
still
say
there?
we get the tomorrow's ad live. Tomorrow's ad done.
Ad copy. Which ad do you need for tomorrow? Do you need
Our
any of
crowd.
these for
One of them?
tomorrow?
Yeah, just one of them.
Which one?
Our crowd.
We need the
Our crowd. Symptom.
Symptom.
Symptom
Yep.
with the C.
Symptom.
Okay,
Symptom with the
3,
C. That's
2.
exactly what-
Okay. Charles, you're talking over here. 3,
That was me.
2. Okay, it's time for another Our Crowd deal of the week. Right now, you can join Our Crowd's investment. Right now, you can join Our Crowd's investment in Symptom. Right now, you can join Our Crowd's investment in Symptom. According to the deal memo, Symptom helps companies identify and address their biggest cybersecurity vulnerabilities using a simple solution that can be up and running in minutes. At this year's Global InfoSec Awards, they won Best Cybersecurity Product. Speaking of great products, all around the world, tech companies are innovating and driving returns for investors. Our Crowd analyzes many of these companies, which span the entire global private market. They select companies with the greatest growth potential and then bring them to you. Our crowd's accredited investors have already invested over $1 billion in growing tech companies. 29 of those companies are currently unicorns, and many of our crowd's members have benefited from over 40 IPOs or exits. So here's your CTA. The old call to action. If you're an accredited investor, you can join our crowd for free at ourcrowd.com/twist and review the current deals. There's no payment involved until you decide to invest. That's ourcrowd.com/twist to sign up for free. Boom. I can read an ad. All right, we're done. We're done here.
Good. Can you do one pickup for me?
Sure.
Just read these two lines again that I'm hovering over.
3,
this
2,
one and then the one below it.
3.2. According to the deal memo, Symptom helps companies identify and address their biggest cybersecurity vulnerabilities. They use a simple solution that can be up and running in minutes. You changed the order there to make it more readable?
I did.
Good job. I like that on-the-fly editing. Even if you screwed up and you made a bad edit before, fixing it is even better leadership. I like it. I like better leadership. Okay, everybody, I got to go to Founding University. Bye-bye. Okay.
Industry.
Intro and